Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to Accountancy second PU online classes. In the previous class we have solved one problem under premium method, that is first method. Again today I am going to solve one more problem on premium method, that is first method itself. Let me read the problem, and in the meantime let us analyze, and then we will solve the problem. Page number 35 of your question bank. Sachin and Dravid are partners in a firm sharing profits and losses in the ratio of 3:2. Their balance sheet is given below. Balance sheet as on 31st March 2017. Creditors, liability side, creditors, bills payable, normal liabilities, reserve fund, of course, it was there in previous problem also. What we did? We have distributed it among the old partners only in their old profit sharing ratio. So, old ratio was 3:2, that is 3 by 5 and 2 by 5, 3 plus 2, 5 denominator. So, we have to credit it to old partners capital accounts. Then, capital balance is given, that is the opening balance of capital account by balance brought down on the credit side. Remember, all liabilities will show credit balance. Don't get confused. That is combined capital accounts of partners, and you will write two balance brought down on the debit side. Wrong. Remember, all liabilities will have credit balances. Remember this simple formula. You will not get confused in examination. So whenever it is a liability, enter on the credit side only balance. Two by balance brought down. Remember. Then cash in hand, it is given. Cash at bank, see, cash in hand, cash at bank, both are given. So in this case, cash at bank amount is more, 18,000. So better you pass bank interest. If both are there, you just pass bank interest. Don't do any changes in cash in hand. In balance sheet, new balance sheet, cash in hand, you will write, and amount will be 2,000 only, whatever is there in the old balance sheet. Don't make any changes. Any adjustment in cash, that is cash brought in by, that's a cash brought in by new partner towards capital, will give check through the bank only, he will give. So treat it as bank entry, pass bank entry there. Again, that is amount brought in towards goodwill, again pass bank entry for that, and do the adjustments in bank in the new balance sheet. Then sundry debtors. Remember, there is a provision in the balance sheet itself. So the net debtors, gross debtors will be 25,000. There is a provision for doubtful debts, PDD, this 2,000. So net debtors given in the balance sheet is 23,000. Remember. Stock 10,000, furniture, then buildings, profit and loss account. I told you in my previous classes, profit and loss account may appear on the asset side of the balance sheet. What does that mean? It is accumulated loss. Remember friends, it is accumulated loss which should be transferred to the opposite side of capital account. Here it is given on the right hand side, there you should enter on the left hand side. That means debit side of partners capital account to profit and loss account, accumulated losses only to the old partners. Remember, as we are distributing the profits only to old partners which is there in the balance sheet, in the same way we have to distribute the losses among old partners only in their old profit sharing ratio. New partner has nothing to do with this loss. It should be borne by old partners only. Remember. Then yes, adjustments are given. There is a new partner got admitted, name is Ashwin, as a new partner into the partnership on the following terms. He brings in 40,000 as capital. So, bank account debtor to new partner's capital account should be the entry. New partner's capital. So, on the credit side of capital account by bank in new partner's capital account, you will write 40,000. And rupees 18,000 towards goodwill for 1/4 share in future profits. New ratio of all the partners are not given in the problem. So, what we have to do? We have to assume that the sacrifice ratios of the old partners will be same to that of their old ratio. That is how much? 3:2. 3:2 itself is the old ratio and sacrifice ratio also, because new ratios of the partners are not given in the problem. Then, moving on to next part, that is so on the credit side by bank in new partners capital we will write 40,000, then 18,000 towards goodwill. Goodwill should be distributed immediately among the old partners in their sacrifice ratio. So, goodwill account debtor to old partners capital account. So, you will enter on the credit side of old partners capital account, that is by goodwill account. By goodwill account, you will enter only in the old partners capital account. Then, PDD increased to rupees 3,500. Remember, there are two words they use mostly in admission problem or retirement problem: increased to, increased by. Remember, increased by means that is the amount of increase. Suppose PDD is increased by rupees 3,500 means that is the increased PBD. Increased PDD, that is 3,500 plus already appearing in the balance sheet. Whatever appears in the balance sheet, that is 2,000 plus 3,500, together 5,500 will be the final PDD, which should be deducted in the new balance sheet. But in this problem it is given as, and there in that case we have to debit revaluation account with rupees 3,500. Remember, but in this problem it is given as increased to. That means that is the final PDD. 3,500 is the final PDD that should be deducted from the debtors in the new balance sheet. Debtors, write the amount, gross amount, that is 25,000 minus PDD 3,500, write 21,500 in outer column in this case. Then how much should be entered in revaluation account? Final PDD is 3,500. Already appearing PDD how much in the balance sheet? That is 2,000. That means increased PDD is 1,500. 1,500 should be entered in the revaluation account, because we record only the increased or decreased values of assets and liabilities in the revaluation account. So here, as the final PDD, increased to means that is the final PDD. Increased by means this much should be increased. Final PDD should be this plus already appearing PDD. So here it is final PDD is 3,500, already appearing is 2,000. So the increased PDD is 3,500 minus 2,000, 1,500 should be recorded on the debit side of revaluation account. So remember this very clearly. Yes. Then prepaid insurance rupees 2,000. Insurance always is an expense. Remember, insurance always is an expense. Insurance premium it means. So any expenses prepaid means paid in advance, which is not due but we paid in advance. If suppose the premium wouldn't have been paid, then your cash balance could have been more, isn't it? If the premium is not paid, then cash balance remains more. As we paid in advance, the cash balance decreased. So that is an asset. prepaid insurance, expenses paid in advance, which is not due actually. Otherwise, your cash balance would have been more. So, increase in cash balance means what? That is increase in the value of asset. So, this should be entered on the credit side of revaluation account. Expenses pending to be payable, debit side, and expenses paid in advance should be on the credit side of revaluation account. And in the balance sheet, new balance sheet, we should show it as an asset, prepaid insurance on the asset side, remember. So that is how we have to solve this problem. Let us solve it. Revaluation account. Revaluation account. Draw the columns. Revaluation account. You need not write here date and all these things are not required. So revaluation account. Yes. Write a column headings. Debit credit is a must. Account means debit credit. Remember, very simple formula. So particulars, amount in rupees. Write this amount in rupees. Cultivate this habit. Particulars, amount in rupees. Yes, let us start entering one by one. First one is, there is depreciate furniture by 10%. So, to furniture account, depreciation, calculate how much? 25,000 into 10%. 25,000 into 10 by 100. 10 by 100. Show it within bracket. Write the amount in outer column. 2,500. 2,500. Then there is decrease in the value of building to buildings account. Buildings account, that is depreciation, as it is fixed asset. Depreciation, old value was 50,000. New value is 45,000. So value decreased. How much decreased? That should be recorded here. Only 5,000 decreased. So that should be recorded. Then there is PDD. PDD increased to rupees 3,500. I already explained this. So enter here to provision for doubtful debts account. Provision for doubtful debts account. How much? 3,500. That is the final PDD, isn't it? This is old PDD, 2,000 already appearing in the balance sheet. So difference is 1,500. That's all. There is a prepaid insurance, should be recorded on the credit side by prepaid insurance. Prepaid insurance. Insurance. How much it is? 2,000. 2,000. That's all. Close revaluation account. Find out the difference. I think debit side is greater. So take the total of debit side first and write the same total on the other side. It will be 4 plus 5, 9,000. Yes, it is 9,000. Write the same total on the other side. 9,000. So done. Find out the difference. 7,000. This is nothing but debit side is greater than the credit side. Total of debit side is greater than the total of credit side. That means there is a loss in the revaluation, loss in loss on revaluation of assets and liabilities by old partners capital account. Remember, you must write specifically old partners capital account, capital accounts. Underline this. Write the names of the partners, that is Sachin and Dravid. Am I correct? Yes, it is. Sachin and Dravid. And Dravid. Sachin how much? 7,000 into his share was 3 by 5. 3 by 5 is equal to, it will be 4,200. 4,200. Then 7,000 into 2 by 5 for Dravid. Dravid, that is 2,800. 2,800. Write 7,000 here, and right here loss on revaluation. Loss on revaluation. Balancing figure. Balancing figure. That's all. So your revaluation account is done. Now let us move on to the next part, that is combined capital accounts of partners. Combined capital accounts of partners. Capital accounts of partners. Partners. Yes, 3 columns on either side. Yes, here again. Yes, debit and credit. Credit. Write the names, particulars. Write the names Sachin, Dravid, and new partner Ashwin. Write the names in full. Don't write SDA. I wrote it, but you don't follow it. Please write in full. Rupees. Here also particulars. Sachin, Dravid, and Ashwin. Rupees. Yes. Columns ready. Now let us start. Starting with the opening balance of their capital accounts. Old partners by balance brought down. By balance brought down. Write their capital balances. Refer old balance sheet. Capitals. That is how much? 50 and 50. Correct? 50,000 and 50,000. Yes. No amount in new partners column, because he has joined just now. No. Next one is refer accumulated funds or reserves or any profits. Yes, there is a fund, that is a reserve fund is there. Reserve fund is there. Amount is how much? 3,000. Should be distributed among old partners only in their old ratio 3:2. So by reserve fund, on the credit side, reserve fund 3:2, old ratio 3:2, share it among old partners only. That will be 1,800 and 1,200. 1,200. Then comes anything else? Refer asset side. There is a profit and loss account. We have tackled in the previous problem also. So should be debited to old partners capital account in their old ratio. So to profit and loss account on the debit side, to profit and loss account profit and loss account, write accumulated loss, write the amount, distribute among them 5:2. How much it is? No, 3:2, I'm sorry, 3:2. 3:2, right here ratio, and share it among them 3 and 2, 3,000 and 2,000 to old partners only, new partner nil. Then what else? Yes, there is no other accumulated profits or reserves. Let us move on to the next step, that is capital brought in by the new partner. I told you, let us pass bank entries. So by bank account, capital introduced, right within bracket, capital brought in, right only in new partners capital account, that is 40,000. That's all. Then what else? Goodwill is there. Goodwill. So new partner has brought it. Before that, there is a revaluation loss, right? Revaluation loss. If it is profit, it will appear on the credit side. If there is a loss, will appear on the debit side. Journal entry is here. See, old partners capital account debtor to revaluation account. So old partners capital account debtor to revaluation account, right on the debit side to revaluation account. Loss. How much? That is 4,200 and 2,800. 4,200 and 2,800. Then what else? Yes, goodwill is there. Goodwill brought in by the new partner should be distributed among old partners in their sacrifice ratio. So entry will be goodwill account debtor to old partners capital account. So by goodwill account, sacrifice ratio 3:2. 3:2. Distribute among them how much? 10,800 and 7,200 only in old partners capital accounts, because the total amount brought in by new partner towards goodwill is how much? 18,000. Yes, it is 18,000. I think that's all. No other entries. So close the account and find out the difference. Credit side is greater, so write the total of credit side first and write the same total on the other side. 62,600 first partner, that is Sachin. Then Dravid, it is 58,400. Then the last partner Ashwin, new partner 40,000. Write the same total on the other side, that is 62,600. Then 58,400 and 40,000. That's all. Now find out the difference, that is to balance carried down, balancing figure. Yes, write the amount 55,400 is the difference. Then 53,600 and 40,000. That is the amount, that is a capital balance, final capital balance in the accounts of all the partners. Bring down the balance. I told you, you must bring down the balance in the examination by balance brought down. by balance breakdown 55,400, then 53,600, and last one 40,000. That's all. Don't draw line, keep it as it is. 55,400, 53,600 and 40,000. Yes. Now let us prepare balance sheet. So balance sheet, draw the columns, write balance sheet of Sachin, Dravid and Ashwin. Sachin, Dravid and Ashwin as on what's the date of admission? It is 1/4/2017, correct? Yes. April 1st, 2017, within bracket after Ashwin's admission. After Ashwin's admission. So let us draft the columns. Draw the columns. Yes, liabilities, amount in rupees, assets, amount in rupees. Don't write debit credit here. It is not an account. Balance sheet is a statement of assets and liabilities. It is not an account at all. Remember. Yes. Let us start with the most liquid one, that is cash in hand is there. So cash in hand, no change as it is 2000. Cash in hand 2000. Then cash at bank, there is a change. So cash at bank, opening balance how much it was? 18,000. Refer balance sheet, 18,000 plus cash brought in by the new partner towards capital, that is amount brought in by new partner towards capital 40,000, then amount brought in by new partner towards goodwill 18,000. So it will be how much? Total it will be 36 plus 40, 76,000. Yes, it is 76,000. Then next asset will be sundry debtors. There is a change. Sundry debtors, gross debtors was a March 25,000 and PDD increased to 3,500 minus PDD. Here total PDD should be deducted 3,500. So 21,500. Then next will be stock. Is there any change? No. Write it as it is 10,000. There is no change in stock. Then next asset will be furniture. There is a change. Furniture, how much? 25,000. Inner column minus depreciation at the rate of 10%. Depreciation at the rate of 10%. 2,500 deduct and write 22,500. Yes. Then there is buildings. Again there is a change. Original value of building was, old value of building was 50,000. Now it is revalued at rupees 45,000. That means there is depreciation. Write the new value in outer column first, 45,000. There will not be any confusion then. Now find out the difference, treat it as depreciation, that is 5,000. Then are there any other assets? Yes, there is one more asset, that is prepaid insurance. Expenses paid in advance, insurance paid in advance. So prepaid insurance. How much it was? 2,000. Write the same amount, no change, 2,000. That's all, no other assets. Move on to the liability side. Creditors, no change, write it as it is. Creditors, 18,000, refer old balance sheet, no change. Bills payable, how much? 12,000. Are there any other liabilities? No, there are no other liabilities. Straight away, capital accounts. That is capitals. Under that, Sachin, Dravid and Ashwin. Write the amount, final balance, that is 55,400. 55,400. Then the other partner 53,600. 53,600. And last partner 40,000. 40,000. Total in outer column 1,49,000. 1,49,000. Write the total and check whether it agrees or not. It must agree. Balance sheet, we are not tallying it. It gets tallied automatically when you follow all the accounting principles properly. That's all. We are not tallying the balance sheet. When you solve it properly, then it automatically gets tallied. Now it is 1,79,000. 1,79,000. 1,79,000. Yes, it is. So this is how you have to solve a problem. Whenever a problem and admission is given, I will take up the other problems in the next class. Now write assignment. Solve this Sachin, Dravid and Dravid. This problem number 2, page number 35, as assignment problem, and submit assignment on time. Thank you for watching this video. Thank you.